Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, this is the second video of Amalgamation of Companies chapter. Now in the previous video we saw the concept of amalgamation, and we also discussed the three activities that comes under amalgamation of companies. Yes, amalgamation, absorption and external reconstruction. Now we have discussed all this with the examples in very much detail, yeah, and then we came to know that here there are two point of view. One is the point of view of the companies which are getting liquidated and the new company, yeah, two point of view. So here old company is called transferor company in this chapter, and the new company is called transferee companies. Yes, and the accounting treatment is also separate in each of these parties. Yeah, here in the transfer company liquidation proceedings are applicable, and here in transferee companies accounting standard 14 is applicable. Yeah, accounting standard 14 talks about the amalgamation. And then we came to know about the purchase consideration, the price that is payable from the transferee company to the transferor company. Yeah, purchase consideration, that is called purchase consideration. And there are two methods for calculation of purchase consideration: net payment and net assets method. So now in this video what are we going to do is, in this video we are going to only focus on purchase consideration. Yeah, first let's understand what is meant by purchase consideration. See here, it's very simple. Purchase consideration can be defined as the aggregate of the shares and other securities issued and the payment made in the form of cash or other assets by the transferee company to the shareholders of transferor company. So what is purchase consideration? Purchase consideration is something that is paid by the new company to the transferor company, because this transferor company is being sold to transferee company. This company is purchasing the transferor company, yes, so they have to pay something, and that something is called purchase consideration. Now this purchase consideration can be in form of cash, it can be in form of shares, preference and equity, and it can be in form of debentures also, other securities. All right, so there can be various forms of purchase consideration. Fine. So this is what is purchase consideration. Now here you have to calculate the purchase consideration through either of these two methods, net payment method and net assets method. Now you will say in our book we have one more method, that is lump sum method. See, lump sum method is nothing but that the purchase consideration is already given in the question itself. That is called lump sum method. It's already mentioned. So that is not a method of calculating purchase consideration. It's given. What are we paying to the owners of transferor company? It is given in the question. So that is lump sum method, right? So it's not a method at all. Only these two methods are there, net payment and net assets. Yeah. And then, so you understood, right, what is purchase consideration? Purchase consideration is something that is payable by the transferee company to the transferor company, new company to the old company, right? And then to whom purchase consideration is paid? It is paid to the owners of transferor company. Now who are the owners? Owners are the equity shareholders and preference shareholders. Fine. So this is what is purchase consideration. It's simple. This is the definition according to the accounting standard 14. All right, this is the definition according to the accounting standard 14. So it looks a little bit tough, but believe me, it's simple. The purchase consideration is simple. This is just the definition. It looks complicated, but it's simple. Okay, purchase consideration is something that is payable by the transferee company to the transferor company. Fine. So now, then as I said, there are two methods of computing the purchase consideration. One is net payment method and the other is net asset method. Now when you will see the question, now mostly what happens in your BCom, BBA, BAF exams, right, in your degree level exams, what happens, you get purchase consideration small problem. Yeah, small problem you get on purchase consideration for 4 marks, 6 marks, 5 marks, depending upon the universities, right? So here what you have to do when you see that problem, first you have to look for the information that you need to calculate net payment method. So first you are going to look for net payment method. Yeah, you are going to try to calculate the purchase consideration through net payment method. If the information is not available, then you will jump to net asset method, right? So now let's discuss these two methods. See here, it's very simple. Let's start with the net payment method. See here, let's say this is a balance sheet of any company. So in the balance sheet, yeah, I know it's a horizontal balance sheet. Yeah, yes, just to understand the concept, right? So here, equity shareholders and preference shareholders, these are the owners of the company, right? So in net payment method, what happens is we have to take whatever that is given to the owners of the company. Owners means equity shareholders and preference shareholders. Yeah, so what do you have to take? You have to take whatever that is given to these two people, to these guys, right? Equity shareholders and preference shareholders. So what can be given to them? Cash, shares, debentures, or anything that is given to them, that would be called as net payment method. You have to add up all of that, and that would be the net payment that is made to the owners of the company, and that is how you are going to calculate the purchase consideration. Fine. And then we have net asset method. Now don't worry, we will solve problem on net payment method and then you will understand it properly, right? And then we have net asset method. See, in net asset method, what do we do is, see, let's say this is a balance sheet. Yeah, so here we have assets, here we have liabilities, and here we have equity. Yeah, in equity, what comes under equity? The preference shareholders, yeah, preference share capital, equity share capital, and reserves and surplus comes under the equity, right? Then we have liabilities here and assets here. So here what you do in net asset method, simple thing is you just subtract, see here, asset minus external liabilities. Assets except fictitious asset, you will not take fictitious asset, and assets at market value. Okay, you have to take assets at market value except fictitious assets. Fictitious assets such as, you know, preliminary expenses written off, and then discount on issue of shares. All these things that will be in the balance sheet, such as debit balance or profit and loss, those are the fictitious assets that will not be taken over here in the calculation of this net assets. Yeah, in this calculation of purchase consideration, you will take all the remaining assets, asset at market value. Fine, you will take market value. If market value is not available, then whatever value, agreed value between the companies or the book value, if nothing is given, then you have to assume that is the fair value or the market value, the book value only, and you have to take it like that, right? So assets at market value, and then you are going to deduct external liabilities. Yeah, don't deduct preference share capital, equity share capital, or reserves and surplus. Those are not liabilities, that is equity. You have to take only liabilities. Okay, and here you also have to take workmen compensation fund and all. Okay, provident fund, provision for taxation and all that, right? So those are liabilities, you have to take it over here, minus external liabilities, and then just after deducting that, you will get purchase consideration. That's it. This is how you will calculate according to the net asset method, asset minus liabilities, market values, right? And then here in net payment, whatever that is given to the owners of the company, that would be net payment method. Yeah, these are the two simple method of doing calculation of purchase consideration. Now we are going to solve some examples on net payment as well as net asset. Then you will feel this is very easy and you can easily solve these small problems and easily get the marks, right? So this is what we have to do now. Let's solve the problems. Yeah, let's go to the problems. Now here we have the problem of purchase consideration. Yeah, and this is a net payment method problem, but in the exam you will not get in brackets like this. Yeah, here I have just written it to identify the problems, right? Okay, so now here's the question. See here, balance sheet of M Limited shows the following on 31st March 2020. So here they have given as an extract of balance sheet. Yes, the capital, see here, 1 lakh equity shares of rupees 10 each, fully paid 10 lakh, and then 50,000 5% preference shares of rupees 10 each, fully paid 5 lakh, and then they have also given us a debenture, 6% debentures, 5 lakh, right? So here is the balance sheet extract, and then they have given us the additional information. See here, N Limited acquired M Limited on the same date and agreed to pay the following. So in this net payment method, what we do, see here, net payment method is what? See, whatever that is given to equity shareholders and preference shareholders, we add that up, and that is what? Purchase consideration. Yeah, that is how you calculate the purchase consideration. Take whatever that is given to the owners, and that something can be in cash, in shares, in debentures also, right? But whatever that is given to debenture holders, that would not come under this, under the purchase consideration. Okay, you have to ignore if something is given to debenture holders, if their payment is done, right? So this 6% debentures, you have to entirely ignore that, right? Then they have said here 50,000 equity shares of rupees 10 each at the rate of rupees 12 each, comma 30,000 8% preference shares of rupees 10 each, and 7% debentures to the extent of rupees 2 lakh to the equity shareholders of M Limited. This means that three things are given to the equity shareholders of M Limited. These guys, equity shareholders of M Limited. What is given to them? First, equity shares are given to them, 50,000 equity shares, and then 30,000 8% preference shares are given to them, and then debentures of 2 lakh. only the amount is given. They haven't given us the number of debentures, so no problem, we will only take the amount. Okay, so three things are given to the equity shareholders of M Limited. So 50% of our work is done, right? Whatever that is given to the owners of the company. Yeah, so what is given to equity shareholders here in this problem? Equity shares, preference shares and debentures. Fine. And then see here the second, 30,000 equity shares of rupees 10 at the rate of rupees 12 each, and 20,000 8% preference shares of rupees 10 each to the 5% preference shareholders of M Limited. Now here they are talking about, see here in the first para they talked about what is given to equity shareholders. In the second para they are talking about what is given to preference shareholders. Yeah, what is given to them? 30,000 equity shares at rupees 12 each. Okay, you always have to take the issue price, not the face value, always issue price. But if issue price is not given, then whatever face value is there, that only will be the issue price. Fine. So yeah, 30,000 equity shares are given to preference shareholders, and 20,000 preference shares also given to preference shareholders. Yeah, here two things are given to preference shareholders. So how are we going to solve this? See here, it's very simple. It's very simple. There is no particular format or anything. Yeah, I have just taken it like this. See here, particulars and amount. That's it. So whatever that is paid to the owners. Now who are the owners of the company? Equity shareholders and preference shareholders. Yeah, so what is given to the equity shareholders? See here, to equity shareholders, 50,000 equity shares are given, isn't it? 50,000 equity shares of 10 each. Face value is 10, but you don't have to take face value. Issue price rupees 12. Yeah, so 50,000 into 12, that is equal to 6 lakh, isn't it? See here, let's calculate. 50,000 into 12, 50,000 shares at rupees 12, that is equal to 6 lakh. Yeah, so that is what is given to the equity shareholders. Equity shares are given, and then preference shares are given. How many preference shares? See here, 30,000 preference shares, right? And at 10 each only. So let's do that. See here, 30,000 at 10, that is equal to 3 lakh. 30,000 into 10, that is equal to 3 lakh, right? And then what is given? And then debentures are given. The whole amount is given, 2 lakh, to the extent of 2 lakh. So fine, take directly, right? Debentures 2 lakh, simple. And then what else? Yeah, the payment to the equity shareholders are done, right? And then we have preference shareholders. What is paid to the preference shareholders? We have to take that. So here two things, right? Equity shares, 30,000 equity shares of 12 each. Yeah, the issue price is 12, so give that to preference shareholders. 30,000 equity shares, 30,000 into 12, that is equal to 3,60,000. 30,000 into 12, that is equal to 3,60,000. This is given to the preference shareholders. The equity shares are given, and then preference shares are also given. Yeah, in the question, see here, 20,000 8% preference shares of 10 each are given to the preference shareholders. So take that, simple. Preference shares, 20,000 preference shares, 20,000 into 10, that is equal to 2 lakh. Yeah, see here, 20,000 into 10, that is equal to 2 lakh, simple. Yeah, then add up everything, whatever that is given to the owners of the company, equity shareholders and preference shareholders. Yeah, it's a simple problem. See here, it's very simple. 6 lakh plus 3 lakh plus 2 lakh. Yeah, then plus 3,60,000 plus 2 lakh, that is equal to 16,60,000. Yeah, that's the purchase consideration. Simple. It's very simple. Whatever that is given to the owners of the company, equity shareholders and preference shareholders, that's all you have to take. Yeah, it's very simple. So whenever you get a problem of purchase consideration, first you have to see whether you have the information you need to calculate net payment. Always try to do net payment first. If you don't have the information, whatever that is given to the owners of the company, then you have to go for net asset, right? For net asset, you need market values of assets and the agreed values of the liabilities. Yeah. So now let's solve one more problem of net payment method. Yeah. Now here we have the second problem of net payment method. See here, it's very simple. So let's go through the question. X Limited takes over the business of Y Limited. Balance sheet of Y Limited shows the following on 31st/3/2020. So here we have been given the balance sheet extract. Yeah, share capital is given and debentures are given. So 2,000 equity shares of rupees 100 each fully paid, 1,000 preference shares of rupees 100 each fully paid, and then 2,000 debentures of rupees 100 each. Fine. Balance sheet extract, and then here they have said that X Limited has taken over the Y Limited. So now X Limited will pay the purchase consideration to Y Limited, to the owners of Y Limited. Now, who are the owners of Y Limited? The equity shareholders and the preference shareholders, right? Then X Limited has agreed as under to issue 6 preference shares of rupees 100 each for every 8 preference shares in the Y Limited. Now here it might look confusing to you because in the previous problem it was exactly mentioned how many shares were issued, what is given, yeah, to the preference shareholders or the equity shareholders. But in this problem the ratios are given, the exchange ratios or the swap ratios are given. See here, to issue 6 preference shares for every 8 preference shares in the Y Limited. Here X Limited is saying to the preference shareholders of Y Limited, if you people have 8 preference shares in your company, then we are going to give you 6 preference shares in our company, in our X Limited company. Yeah, so this is the ratio, 6 for every 8, right? So ये ratio है, right? अगर आपके पास 8 preference shares है in the Y Limited, हम X Limited आपको 6 preference shares देंगे हमारी X Limited company में, right? So this is the exchange ratio. Don't worry, we will see how to do this. It's very simple. Okay, and then see the second point, to issue mortgage debentures at rupees 96 in lieu of debentures in Y Limited, which are to be redeemed at a premium of 20%. Now hold on, see here, in net payment method, what do we do in net payment method? We take whatever that is given to the owners of the company. Who are the owners? The equity shareholders and the preference shareholders. Now here they are talking about something that is given to debenture holders. Debentures are given to debenture holders. Okay, so are the debenture holders owners of the company? No, they are not owners of the company. They are third party, right? Outsider liability. So this second sentence, this second point, entirely we have to ignore this. We don't take this into consideration. Okay, we don't consider the payment or something that is given to debenture holders because they are not the owners of the company. So completely ignore the second point, right? Then go to the third point. Ignore this as well as this. Okay, right? So third point, to pay rupees 25 per equity share in cash and to issue 5 equity shares of rupees 100 at the market value of rupees 120 in exchange for every 4 equity shares held in Y Limited. Now here, see, here they are talking about payment, something that is given to equity shareholders. What is given to equity shareholders over here in this point? To equity shareholders we are giving here cash, yeah, per equity share we are giving how much? rupees 25. Okay, एक equity share पे हम कितने दे रहे हैं? rupees 25. Fine, 25 per equity share cash and to issue 5 equity shares. So we are also giving equity shares also. I mean the X Limited is also giving equity shares to the equity shareholders, but exact number of shares is not given. Same as the first point. The ratio, exchange ratio is given. See here, to issue 5 equity shares of rupees 100 for every 4 equity shares. अगर आपके पास 4 equity shares है in Y Limited, तो हम X Limited हमारी कंपनी में हम आपको 5 equity shares देंगे और वो भी market value 120 पे. Fine, this is the issue price. So we'll take that. Okay, market value is given. This is the issue price. We are going to take that. Okay, 5 for 4. Fine. So now let's solve the problem. It's very simple. Let's see. First, how you start. Net payment method, what is given to the owners of the company, take that. So in the first point they are talking about something that is given to preference shareholders. Yeah, what is given? Preference shares are given, but we don't know the exact number of shares. We have only the ratio, 6 for every 8. Yes, 6 देंगे for every 8 shares. So कैसे करना है? So how to do this? See here, preference shares. First take the balance sheet number of preference shares. How many preference shares are there? 1000 preference shares are there in the balance sheet, right? Take that 1000 preference shares in the balance sheet into the ratio you have to use. Ratio is very simple. See here, 6 for every 8. 6 for every 8, right? Go with the sentence, 6 for every 8, 6 divided by 8. 6 divided by 8. Simple. So 6 divided by 8. Okay, this much shares we are going to issue. Let's calculate this. See here, it's very simple. 1000 shares are there in our balance sheet. Okay, preference shares I'm talking about, into 6. X Limited is going to give 6 shares for every 8 shares. That is equal to 750. Simple, 750 shares. Now what is the issue price? Issue price is 100. Here they have said 100. Okay, so just multiply that by 100, you will get 75,000. Yeah, 750 into 100, you will get 75,000. So 75,000 is the total amount. How many shares are we issuing? 750 shares. I mean, the X Limited is issuing 750 shares. Simple. So this is how you have to do this. Fine. Then second point is ignored, right? So go to third point. Now in third point, yeah, payment to equity shareholders, we are giving them cash and equity shares. So first let's focus on cash. So rupees 25 per equity share. So how many equity shares are there in the balance sheet? 25 रुपए दे रहे हैं ना, 25 rupees we are giving per equity share. So in total we have 2000 equity shares in Y Limited, right? 2000 equity shares. So see this, 2000 equity shares into rupees 25. Simple. 2000 shares, 2000 shares into rupees 25, that is equal to 50,000. That is equal to 50,000. So we are paying them 50,000. X Limited is paying them 50,000. And then they are talking about that ratio thing. See here, that ratio thing is not tough. It's very simple. To pay rupees 25 per equity share in cash, we did that. To issue 5 equity shares of rupees 100 at the market value of rupees 120 in exchange for every 4. 5 equity shares, 4 every 4. Go with the sentence. 5, 4 every 4. So the fraction will be 5 by 4. 5 divided by 4. See, equity shares 2000. This is the balance sheet. See here, how many shares are there in the balance sheet? 2000 equity shares are there in the balance sheet. So take that 2000 equity shares in the balance sheet and then 5 for every 4. So that is why 5 divided by 4. Okay, see here, 5 for every 4. So that is why 5 by 4. So if you put that into calculator, 2000 shares in the balance sheet, equity shares into 5 divided by 4, that is equal to 2500. So we are going to issue, X Limited is going to issue 2500 shares into the market value, the issue price, always issue price, that is rupees 120. So into 120, that is equal to 3 lakh. Simple, yeah. First you took the balance sheet number of shares, equity shares, into the ratio 5 by 4. Go with the sentence, 5 by 4. It was 544, right? So 5 divided by 4, that is equal to 2500 shares into the market value or the issue price. Then you will get 3 lakh. Yeah. And then add it all up, 75,000 to the preference shareholders. See here, plus 50,000 cash to the equity shareholders, plus 3 lakh for the equity shareholders, that is equal to 4,25,000. See, this is how you have to do it. It's very simple. Don't worry if you get, exchange ratios or the swap ratios. It's very simple. You just have to go with the sentence. For, see here, 6 for every 8 preference shares, 6 divided by 8. 5 for every 4 equity shares, 5 divided by 4. That's how you have to do it. Okay, simple, right? Yes. So now we have to see net asset method. So now let's see how to do net asset method. Now here we have the third problem of purchase consideration. So this is a net asset method. So you know, right, what is net asset method? You take assets at market value and you deduct the liabilities at the agreed or market value, whatever that is available. So you take assets at market value, but you don't take fictitious assets, and you deduct only external liabilities and you will get purchase consideration. That is what is net asset method, right? So here is the question. Let's go through it once. Bindu Limited was agreed to be acquired by Indu Limited as on 31st/3/2020. On this date, balance sheet was as follows. So we have been given the horizontal balance sheet. Yeah. See here, equity shares 5 lakh, general reserve, profit and loss. Now this portion is equity portion. Yeah. This portion is equity portion. See here, share capital, and this is reserves and surplus, general reserve and profit and loss account. Yeah, this is credit balance of profit and loss account. So that's why it's coming on the liability side. Yeah, so this portion is equity, and these two 5% debentures and sundry creditors, this is liability, right? External liabilities. And then assets are given, right? So what do? Asset minus liabilities. That's it. Yeah. So see here in the blue ink, Indu Limited agreed to acquire fixed assets at 10% more than the book value. So this company Indu Limited, which is acquiring the Bindu Limited, so they have to pay something, and that something is called purchase consideration. And here they are taking over the fixed asset at more value, okay, at 10% more value, right? But current assets were only valued at 1,50,000. So here they have given us the agreed value of current asset, that is 1,50,000. So that is what we are going to take in the calculation. And then they have said the purchase consideration was paid 50% in equity shares of rupees 10 and balance in cash. So what is this sentence? See here, first you will calculate the PC, the amount, purchase consideration. Then they are saying this line, see here, how the purchase consideration is paid, in what form it is paid to Bindu Limited. Yeah, so that is called discharge of purchase consideration. Yeah, how the purchase consideration is being paid, in what form, cash, equity share, in what form. Yeah, you will use the net asset method to calculate the number, purchase consideration, the price, but how will it be paid? That is called discharge of purchase consideration. Yeah, that is what they have asked. Calculate purchase consideration. Yeah, that we will do with the net asset method, asset minus liabilities, and show discharge of purchase consideration as well. Okay, I have as well. Yeah, as well. So discharge of purchase consideration, in what form are you going to pay that? So here they have said purchase consideration was paid 50% in equity shares and balance in cash. Now let's solve this problem. See here, first what are you going to do? Asset minus liabilities. Yeah, calculation of purchase consideration. So what all assets this Indu Limited has taken over, that you are going to take. So assets taken over, see here, fixed assets and current assets are there. So they have been taken over, but fixed asset has been taken over at 10% more than the book value. So what you have to do, see here, 9 lakh, that's the book value, isn't it? 9 lakh is the book value, but it is taken over at 110%. Yeah, 10% more. So into 1.10. If it was 20%, 1.20, like that you have to do. If it is 30% more, then 1.30, like that. So 9,90,000. That is the value at which Indu Limited has acquired fixed assets. Okay, 9,90,000. So that is how I calculated this. 9 lakh into 1.10, that is equal to 9,90,000. Fixed asset and current asset agreed value is given in the additional information, that is current assets were only valued at 1,50,000. Yeah, so take that directly and then add it up, because those are the only assets, fixed asset and current assets here in this problem. So that's equal to 11,40,000. See here, 9,90,000 plus 1,50,000, that is equal to 11,40,000, right? That's the total assets. Then you have to deduct the external liabilities. Now, is this liability general reserve? No, this is equity. Is profit and loss liability? No, that's come under equity only, reserves and surplus. Yeah, it's a profit, reserves and surplus, it's not liability. You have to take only the external liabilities. Now the liability is 5% debentures and sundry creditors. Now they have not given any extra information regarding that, so we have to take the book values only. Okay, 5% debentures 1,20,000 and sundry creditors 1,30,000 in the brackets. Why in the brackets? Because you have to subtract, right? So that is why in the brackets. 1,20,000 in bracket, 1,30,000 in the bracket. So if you deduct these two from the total assets, see here, 11,40,000 minus 1,20,000 minus 1,30,000, you get 8,90,000. Yeah, 8,90,000 as the purchase consideration, PC. Yeah, simple, right? Then you have to show them discharge of purchase consideration as well. Now we calculated the purchase consideration, that is the price that will be payable from Indu Limited, yeah, from the transferee, the new company, to the old company, transferor Bindu Limited. That is what is purchase consideration, price payable to transferor company. But discharge of purchase consideration is in what form this price will be payable, in what form. Yeah, that is what. So in cash and in equity shares, as it is said in this question. See here, the purchase consideration was paid 50% in equity shares. So if 50% is paid in equity shares, then obviously the remaining 50% is paid in the whatever they have said, balance in cash. So 50% in cash. So first let's do the cash. In cash 50%. Now the price is 8,90,000. They are saying 50% will be paid in equity shares and 50% in cash. So simple, divide that by 2. Yeah, 8,90,000. 8,90,000 divided by 2 or into 50%, 0.50, whatever, right? 4,45,000. So 4,45,000 will be paid in the cash and the remaining in equity shares. Yeah, so Yeah, the remaining 50% will be the same, right? 4,45,000 only. So 4,45,000 will be paid in equity shares. Simple. But if they ask in question how many shares would be issued, then simple. Take that amount, 4,45,000. Now you understood, right? How did we get this 4,45,000? Simple, 50% of 8,90,000. Yeah. But if they ask how many equity shares would be issued, then take that amount, 4,45,000, divided by the face value. The face value that is given in the question. Equity shares will be given of rupees 10. That's the face value. Or the issue price, whatever. Not the face value, issue price you have to take, but here there is no issue price, there is only face value. So take the face value. Divide by 10, that is equal to 44,500. Yeah, 44,500 shares. Right? If they ask in the question, then you have to show them the number of shares to be issued. Right? This is what it's simple, right? 50% in cash, then 50% in equity shares. And then if you want to calculate the number of shares to be issued, then just divide it by the issue price. But here issue price is not there. The face value is there. So we'll take the face value, 44,500 shares to be issued. So this is how 8,90,000 purchase consideration is to be discharged. In what form? कैसे pay करेंगे? Right? कितना pay करेंगे? कैसे pay करेंगे? Right? In what form it will be paid, right? That's what discharge of purchase consideration. It's simple, right? So this is how you have to do the net asset method, asset minus liabilities. And if they ask discharge of purchase consideration, कैसे pay करना है, so you have to show that too. Simple, easy, right? Net asset method. And always remember, okay, don't take fictitious assets, and you have to only take the assets which have been taken over. जो assets company ने नहीं लिया, you don't have to take that, okay? The assets which have not been taken over by the company, those assets will not be taken over here, right? Simple. See you in the next video, okay? In the next video, we are going to see the treatments and then full-fledged problems. All right.